I got everyone. How you going? Thanks for joining us today on the Smart Property Investment Show. I have he's nearly a regular, but not that regular guest. He's come back in the studio. I haven't seen him I've seen him socially and just around the traps, but I haven't had him on the podcast for a little while. The last time he was on was early 2018. And by memory, he was probably one of the first guests ever on the Smart Property Investment Show. He's well, back then he was a young investor. Now he's getting a bit older. He's sort of growing up a bit these days. He's married now, and he's all very serious in a house, and being a proper young gentleman. But he drives a fancy car as well, which I think the last time I saw him. Anyway, I've got him back in the studio, and this is a gentleman who I've kept an eye on for quite some time. He's a young, hungry property investor. He's driven and focused on the goal, the objective of creating wealth through property and property investment. He's got it flowing through his brain. He's an accountant, but I'm not going to talk to him about that today. But Jeremy Iannuzzelli. Jeremy, how you going? You well?
Mate, very well. And that last name is becoming like it's rolling off the top of your tongue nice and
Pretty
easy
good.
now.
Iannuzzelli.
Pretty good.
Yeah. I feel like I need to be waving my hands around or something when I say it.
In true Italian tradition.
True Italian. Now, you've just got back from Europe or something.
I have, yes. I had a belated honeymoon, so married in April of 2018, and just due to work commitments, both myself and my wife, and trying to wind things up before the end of the financial year and end of the calendar year, we went away for our belated honeymoon for about 5 weeks.
5 weeks.
And my first trip there, so I absolutely enjoyed it in the freezing cold, but it was very historical for me. Got to see lots of different things, especially Auschwitz, and I've always been a very keen person to look at what happened in World War II, because it's something that happened just so recently. So I really enjoyed it. It was good to experience that, and it opened a lot of things for me in my heart and eyes as well.
That's cool. So you're in Krakow then for a little while?
In Krakow, yeah. In Krakow, I got to see the salt mines. And
I went there. You know what? It's a funny story. I don't know how funny it is, but I went out. I was on New Year's Eve in Krakow. I don't know, it's just like years ago. Had a very, 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 very big night. And a guy I was with, who's probably listening to this, will be smirking right now. But I think the day after, or New Year's Day, or the day after that, we went out to Auschwitz-Birkenau, and did all that stuff. It's really sobering, but I was still hungover, which really amplified it. But I remember being in those salt mines on the way back from there back to Krakow, and the air in there sort of like it really helped relieve my hangover.
It was definitely fresh in there. It was good place to be, especially if you spend a little bit of time and you're into all those health things as well.
Yeah, well, I remember that salt mine, it's like ballrooms and carved out.
There are. You can get married in there. And there's church services in there. It's a fantastic little place. Definitely, it was a bucket list thing for a lot of people if they do visit Poland.
Yeah, that's good. So where else in Europe were you?
Mate, we did a bit of travelling. So UK, went through to France, Paris. Then we moved up through to Germany. Spent New Year's in Berlin. That was an eye opener.
Cool.
Fireworks being lit on the side of the road by 5-6-year-old kids. Yeah. So it was an eye opener. And then through to Czech Republic, Slovakia. Made our way through down to Italy, and finished off the trip in beautiful Sorrento. So
really?
it was
awfully romantic as well.
Definitely romantic, and a real eye opener as well, just to show how lucky we are in Australia to have the things and the opportunities we do.
So to give this into a context of goal creation and sort of financial goal setting, is that something that planning for that, like 5 weeks in Europe, and I imagine knowing you probably weren't in the worst backpackers where I'd be staying. You're probably somewhere a little bit nicer. Was that like a big expense, and how did you justify that in your mind, knowing that you're probably thinking, I could probably buy a house with what I'm spending right now?
Yeah, definitely. Look, we budgeted for it, so we were engaged a year prior to getting married, so it was something that we did save for, and we pinched and put the pennies aside for it. And we made sure that when we did go away, there was plenty of buffer there to cover anything that we needed to do. I wasn't earning income during those 5 weeks, obviously not working. It's planning. It all comes, like everything, like property, like investing, like business and holidays, you got to plan.
Has that sort of realigned your attitude towards work and play? Like, are you going to try and do a few more trips like that?
Yeah, I'm a big fan. Holidays has to be earned. So for me, I really justified to myself that I earned that holiday. I worked very hard for the couple of years leading up to it. I hit some major goals that I wanted to, and I really went away with the personal satisfaction that I earned this holiday. It's not something that I was just gifted or given. I earned it. And I think that's the right approach, definitely right approach for me anyways, is that I'll continue to work hard and burn myself out if I have to. So when I do go away, it's well earned.
Did you switch off when you were away?
We brought the computer along.
Yes. Every morning.
Every
having
morning
your coffee,
there was a
check in?
couple hours of work in the morning and a couple hours work at night. But you know yourself, when you run your own business, Phil, you really never switch off. It's just a matter of balancing it right. But look, we had a great time, and 4 hours a day, you really don't notice that you've done it when you're up early and doing a little bit of extra late at night.
Yeah, it actually allows me, and this probably sounds horrible if you speak to one of these motivational work-life gurus saying it's wrong, but I actually enjoy my holidays more if I can actually spend an hour or two in the morning, sort of early-ish over a coffee or something to eat, and just check in and go, you know what, everything's all right. And then I can enjoy the rest of my day.
Yeah, it's your business is your baby.
Yeah.
Right? It is part of your family, and it's a big part of your life. So I think having that little bit of satisfaction that it is going all right and you have done a little bit for the day, it just kind of makes the day flow on. Yeah, become
Does your
very
wife
easy.
get annoyed with that, or she just knows?
No, she knows. No, I'm very understanding, and she's a hard worker herself. So as a school teacher, I often see her up early in the morning, and she's in bed late at night as well, working. So we both got the same work ethic, which is great. But you work hard, and you deserve to play hard at the same time.
So working hard, playing hard. As my initial sort of couple of remarks, you're a big property man. You're using property as a vehicle to create for you a life that you want to create with you and your wife and maybe your family. I don't know if you got any news.
No news yet. No news yet, but hopefully something in the trap soon, mate.
But we were when we got together last, which was early 2018. Go and check it out. I think it was March, by the way. But just search Jeremy Iannuzzelli on smartpropertyinvestment.com and you go and track it down. You were planning, or just a few months away from your wedding by memory? And our conversation was around spending money on the wedding versus potentially putting that into another asset. So two different assets, right? Mm-hmm. Marriage, great asset.
It definitely is.
And the best money I've ever spent was around the investment in my long-term health and happiness.
That's right.
As a husband, right? So I don't even know what my wedding cost. And
Phil's eyes at the moment are lightened up. So he's very excited about this.
It's cool, but I have no idea what that experience cost, but it was cool. So, so I never ever framed it in a context of, this is money I should be parking elsewhere. And we had that conversation when we got together. What's going on with your portfolio since then?
Yeah, so it's we were in the process during the time of getting married. We're in the process of bought a property just prior to getting married, and I was in the process.
That's your principal place of residence?
That was about a year beforehand, but I was in the process of building that. So we started off trying to build a little bit of a bigger house, and then just due to a little bit of market changes at that particular stage, I changed the mind and built the duplex instead. And I think that was probably a right decision, because when I look at the current market at the moment, I've been able to reduce the amount of loss that one potentially could gain, because if I built the house that I wanted to, it would have ended up costing me, $1 million, and probably in today's market it would have been worth only maybe $850 to $900. But changing that strategy, building the duplex and finalising it, the overall cost ended up being 1.25, and I think I've secured that value to a point where there is still gain that I've made, but at the same time there's $500-600 worth of rent coming in on the other side.
Did you split two titles, or it was one title?
At the moment it's one title, but it has got everything there.
You built it so he can make it two titles.
Correct.
Separate gas, separate
electricity, gas, everything there separate, ready to go. It's just a matter of doing the application in with the council and splitting the block.
Okay, good. So that's happening. So you're living there?
Living in one side, correct. Okay. Renting out the other.
How's the tenants on the other side? Do you manage it yourself, or you got someone managing it?
No, I always have someone managing it. Just from the time point of view, it's always good to have that separation between your tenants and yourself, especially when you're living next door. Yeah. So no, have someone manage it. I have people managing all my properties, and it just helps me with my time.
Okay, great. So by memory, your portfolio, sort of 15, 20 properties, I can't remember.
About 18. There's 18 properties now.
Okay.
And there's a couple in there which are joint venture properties between myself, father and uncle.
That's right.
And it was just due to, obviously, lending restrictions. I believe in a situation complication resolution process, and the situation was the lending environment wasn't great, especially for me, and not having up-to-date financials, with a number of years behind me. But that will soon change when June 2019 rolls over. But the situation is the lending environment isn't great. They had an RC, a Royal Commission, going on in the background. So I'm a big fan of finding, okay, well, I understand the situation, and we have the complication is that Jeremy can't get the money. What's the resolution? So I sat down with my father and sat down with my uncle, and we all have different In respect to what we do, we've all got a different strength. My father is very good from a feasibility point of view, been working for quite a while. There's a bit of money that he's saved up, and his serviceability is very strong. He's got really no debt at all. His background is a builder, fantastic knowledge on building, fantastic knowledge on the overall construction. And myself is always had the network and the connections inside the property market. I've got the time to research it, and I've got the understanding of how the different councils and local municipalities work. So it's a good team.
So what are you guys doing? Like, are you building some like townhouses and stuff?
Yeah, so that's the ultimate aim, is that the construction side of what we do will start to really ramp up, and there's lots of opportunities in this present market. We have got prices that are coming down, but I'm more looking at market conditions. And at the moment, I feel like it is a post-GFC market condition. It's 2009, hard to get money. People are unsure around property and the stigmatism around it, and it's no competition. So for me, I believe there's a good 6 to 12 month window, even though people do say that the property market has got another maybe 6, 12 or 18 months worth of declines. It's more so about the conditions that I'm looking at. And what I'm seeing at the moment is very little competition. So if we can get a price which we believe and deem that it can't go any lower because it's well below replacement value, I'm not having to deal with huge amounts of competition on that property. So one of the recent ones we purchased was about 900 square metres in a place called Eaglevale.
And is this with your uncle and your dad?
Uncle and father. Yep. 900 square metres in Eaglevale. It's zoned R3.
Where's Eaglevale?
Eaglevale is in the Campbelltown area. And this is a property which was valued at $650, not only maybe 12 to 18 months ago. The vendor bought it at a very high price, and the vendor was a person who wanted to develop the property. You could build 2 houses on it as it was, and potentially with next door there could be townhouses, subject to a little bit of rent back to the low income housing scheme. So this is a person who just couldn't get the money. So they're sitting on a property with no rent coming in, with only interest to pay, and one needs to understand how deep one's pockets are. And it was just one of those ones where they had it listed at about $590, $600, which was probably a little bit high for the market that it was in. I didn't really want the property, but I thought, you know what, an offer is an offer, see what happens. And I put in an offer of $455. It was initially rejected. I said, that's life. 4 weeks later, I get a phone call back saying the vendor was willing to negotiate. I said to the agent, look, I'm not really interested in the property. A week after that, we signed it on a 66W, and the property was unconditional on the day we signed at $455.
That's not bad buying.
Not a bad buy. It's currently rented out. It's getting about $400 per week, and we'll look to do some things with it later on in the future, pending if we can get a couple other properties either side of it. So there is a lot of margin in that property, as is, and there's even more margin if you can consolidate a couple of properties around it.
So this property's already experienced probably top to your purchase price fluctuations of 20+%, right?
Correct.
Already. So you're buying it at what it may bottom out at.
Yeah. Well, look, even if it was to bottom out a little bit lower, the real value is through the construction. The real value is the understanding of what a property zoned R3 in the southwestern suburbs can achieve. Is it something that I'd build on straight away? Well, we'd have to see just where the market goes in the next 12 to 18 months. But it's definitely from a land banking strategy, a smaller land banking style property, but it's covering its own.
Yeah, that's it. So you don't have to worry too much, because as long as you've got someone sitting in there as a tenant, it's essentially washing its own face.
Correct. And there's a lot of upswing and opportunity in the future.
So this is your strategy at the moment, is it? We're talking Sydney market. You like Sydney?
Sydney. I'm back in Sydney now. Yep. So at present there is, I've been a big fan of Queensland. I always have been, purely because when we're buying, a lot of the properties we're buying were below replacement value. I did buy in a Queensland market where I did see some significant upswing, but now I have seen a little bit of the prices coming back, but more so just normalising, because there was such a significant upswing in, the 1 or 2 years that we initially bought in there.
When were you buying in Brisbane?
I was buying in Brisbane in 2012.
Okay.
2012.
Similar time to us.
Yeah, so the prices were dirt cheap, right? Yeah. And they did see a significant level of upswing due to a huge amount of investor activity. But those properties now, I believe there's still a lot more to go in Brisbane. I still think the prices are relatively cheap, and the cost of living there is relatively well balanced. But for me, I see a lot of opportunity back here in my own backyard, things that I can touch, things that I can see, things that I can work on personally. And I want to be part of that opportunity because I do see Sydney as a big growth corridor and centre, especially with an airport, given the delays on it and what it will be pending, a couple of things coming in from the state government and private investors. But I do see that as an opportunity for the long term. And, I want to get in and get a piece of that action while I can. And there's a lot of people who bid off more than they can chew.
Yeah.
And while it's terrible, there is opportunity. It's just a matter of getting that opportunity at the right price at the right time and being able to hold it. That's important.
So what tactics are you going to deploy in order to capitalise on the Sydney market?
So there's about 5 properties in Queensland that are up for sale at the moment. Okay. The properties which I deemed have done quite well. And I do believe there's future growth in those properties for the long term. I've always been a big fan of holding for the long term. That's where you will see the benefit in the dividends. But from my point of view, I've got a situation and a complication of the lending environment. I'm subject to the banks, as we all are, when they're the major stakeholder in the money that I want. And for me, it's a matter of moving that money now to an opportunity where I see a better and more viable opportunity for my next stage in progressing of me becoming a more sophisticated property investor and potentially one day a larger property developer. I think I've got a good team around me, a little bit of wisdom from my father and a lot of experience from my uncle. And I think together we each bring, as I said, a different strength, and those strengths combined can be something much larger in the future.
So you're selling off the cash up to shift those gains into the city market.
Correct, yeah. So even after I take into account the entry costs and the exit costs of those particular properties, there still is some gains.
Yeah.
Admittedly, not as much as one would like. You would love to see hundreds of thousands of dollars in gains, but there's enough there for me to say that it was definitely worth my time and my investment. But more so now, it's about protecting my borrowing capacity. Okay. Because I do believe this potentially could be a year of the JV. Where we've got strong property prices which are in favour of the investor or in favour of the buyer, and we've got market conditions which are that dissimilar of a post-GFC environment where it is hard to get lending, and there's more power in numbers. It's just always been that way through history when it comes to war or it comes to politics, and when it comes to investing. Very common. What we don't understand is people like Stockland, who are a listed company, is essentially just a big syndicate. They've got lots and lots of investors, shareholders, and with that money, they go out and capitalise and do large land developments. Essentially, it's emulating what the larger guys are doing and putting it onto a smaller scale.
So how are you going to approach the city market? Are you going to look for these sort of 900 sort of square metre potential development blocks? Is that the strategy moving forward?
That's my strategy moving forward.
Yeah.
I've got a very good foundation portfolio. And for me, I've been very lucky to see a good end of the Sydney boom. Even with prices coming down, I've still got plenty of equity left in the properties. Not as much as one had, but nevertheless, there's still enough equity there. And the borrowing capacity is getting stronger every year as I continue to grow the businesses and expand. But it's now moving on to the next stage. I really am interested. I've learned a lot. I've spent many years researching developments, and I've got a good team around me now who I can check my numbers and make sure that the feasibilities are iron tight. And we're conservative people being accountants.
Yeah.
So we make sure that we're running on a worst case scenario. And if the return's coming out at a minimum 15-16% on a worst case scenario, I'll take it.
Happy days. Which particular areas of Sydney are you going to target?
Yeah, good question. And the question, it's...
You don't want the competition. They're not going to tell me.
Competition's fine because in the end, it's I believe in giving out as much knowledge as one possibly can, but I'm not a buyer's agent, and these are just my personal opinions. So there is obviously disclaimers there. But for me, I've always been a big fan of knowing and playing in my backyard. So the southwestern suburbs, for me, I do see some really good value. The western suburbs, I see some really good value because the land sizes are much larger and councils are a bit more pro-development. That being said, I am still looking in areas closer, places like Auburn, Granville, and Marylands. There's still prices now which are coming down, and again, those councils are pro-development, but it hasn't stopped me also looking on the northern side of Sydney, places like your Gosford area, even closer towards the city. There's a lot now in our own backyard, even here where we are in your office. There's so many deals where people have just bitten off more than they can chew, and with the right level of cash funding and the right level of borrowing behind you, there's opportunity now everywhere.
So you're not one of those people with the mindset of Sydney, Melbourne property markets, Australian property markets are all softening. The sky's falling in. You're looking at this going, what a great time to be a property investor.
It is.
Yeah.
It is. And I look back
But
to
you
when
said that because you bought well for your foundation portfolio.
Correct.
Yeah.
But I also bought in this environment, 10 years ago. And that for me is, I'm saying, well, why change what's worked? We come off a GFC, we come off a stagnating market, and prices didn't grow. I didn't have equity for 2 years, maybe 3 years. But the yields were there, and the property did show its value in the future. And it only took a little bit of time for things to start moving, and it will happen again. It's a cyclic market, whether it's Melbourne, Sydney, Queensland, WA, Northern Territory, Tasmania. It is all cyclic, and things will bounce back. So I'm a big fan of Warren Buffett, and there's a gentleman who you know very well, Ross. He's one of my mentors, and a person who always hammers that into me, Jeremy. When things are going great, it potentially might be a time to get out, and when things are going bad, it potentially might be a time to get in. So why argue with probably one of the best investors in the world being Warren Buffett? So it's, again, emulating what the big guys have been doing for 50, 60 years.
Success leaves clues, right? Don't try and reinvent the wheel.
No, and it's just emulating their success, but again, on a smaller scale.
And it goes into the whole philosophy of investing within your means.
Correct.
Actually understanding what your capacity is to invest in, and the level of risk or layers of risk that you're happy to apply to your investment strategy. And I completely agree with you. I think, I'm looking at some stuff in the Sydney market now, and I think, I'm not rushing for Sydney. I think, we've got a good portfolio already in Sydney, and this is good foundational type of stuff. But moving forward, we'll be looking for same sort of stuff as you are. There's essentially land banking with development potential moving forward, and it needs to wash its face now. So the investment on paper as it is right now needs to stack up, but you have the opportunity and potential to add value or enhance that investment at a point in time. And even if that's just a matter of selling it to someone who can actually realise that, whether it's a townhouse development, that makes a lot of sense. So I'm excited about Sydney. Yeah,
no, and definitely. And I think the big thing for me, it's about competition. I was at an auction on Wednesday night, and properties, in a place of ads, and again, it's the Campbelltown area, and it's, not ideally one of the most attractive areas in Campbelltown, but, I went to an auction probably about 18 months ago. There would have been 120 people, probably about 80 different groups. And this auction on a Wednesday night had probably only about 25 people. And there was probably about 10 different groups. And believe it or not, you could get a property 68 kilometres away from Sydney, give or take on a good day, about an hour drive to the centre of Sydney. And I saw the 5 properties that were listed. One sold for above 400, we're talking about 404, and the other sold below 400, we're talking in the 370 to 390 mark.
They're like 2010 prices.
And one passed in, and that's crazy. We're talking 400, 500 and 600 square metre blocks. Admittedly, the houses weren't fantastic, and there was definitely work to do, anywhere between 15 to upwards of 50 grand.
Yeah.
But, a savvy person who's willing to spend a bit of time and save a bit of cost, you're not going to get that value.
Yeah.
You're not going to get that value. So for me, it's about market conditions. It's not necessarily about price. It's about competition and market conditions. And as long as you can get in there with what you believe the price is below replacement value or at land value, you really can't go wrong.
So your recommendations to our listeners around, okay, that all sounds really good. What do you need to do to be able to play in this game moving forward?
Look, your lending at the moment is the situation and the complication, and it's finding the resolution around it. So for my resolution was obviously to start to liquidate a couple of the properties that I do have and build up the borrowing capacity. And the cash is what people generally do have. The people I'm speaking with, the deposits are there, the buffers are there, but it's the borrowing capacity. So it's protecting your borrowing capacity in an environment like this is very important. Don't buy in any old thing. You've really got to make sure that the deal does stack up, because there'll be lots of opportunities to buy anything at the right price or a cheap price, but it's what's the plan for it. So the borrowing capacity is important. If you are looking to go into a JV, it's important you understand the mechanics of it, the right structure, and I always suggest to clients that you should be getting a good heads of agreement or JV agreement in place, and understanding the limitations or the cons of going into a JV when you are borrowing money. I've had numerous chats with people like Matthew, who's been a person on your show as well, and Ross, again, one of my mentors, and Scott, his brother and partner in his practices, that understanding common debt reducer, what is that? how does it work, loan portability. So I've been really gearing myself up with the knowledge so I have no limitations or have very little limitations to continue progressing in this environment and buying the right level of property.
So do you put these heads of agreements in place with your father and your uncle? So are they brothers, or is that
no? It's
that's your mum's
my mum's sister's husband.
Okay,
and obviously my father. And
Yeah.
yes, we do have a heads of agreement in place, and it's more so an exit strategy.
Okay.
If one person wants to exit the deal, they could sell to any old person. But again, we've got these clauses in place, and I think it's a good thing. I think it's a necessity. Every person should have it, especially whether you're going in with family or not, because I have seen where this broken up family or broken up friends or even just individuals, but a good heads of agreement or JV agreement is imperative. And I would not recommend anybody go into a deal with someone without a very solid heads of agreement being executed by a very good solicitor.
good, Jeremy. We covered all the ground there.
Yeah, beautiful.
That's good. Let us know what's going on in Sydney. So you're selling 5 properties in Brisbane?
Correct. There's 5
Okay.
on the market. 2
Yeah.
have been sold,
Okay.
and 3 that are obviously in the process of getting sold. And look, there's still movement in that market, as I mentioned.
How much money is it going to allow you to bring back to Sydney?
Look, I'll be getting my deposit back, and hopefully, with my calculations after tax, probably a couple $100,000.
Okay.
But what it does alleviate is over $1 million worth of borrowing capacity.
There you go.
So for me, it's good. A couple $100,000 gets
But it's utility of not having the other debt.
Correct.
Is the key thing.
Correct.
Yeah.
So those properties there, look, do I see a lot of development potential in them? Look, one could say you could put a granny flat on them, but we're not talking about townhouses with multiple dwellings.
Yeah.
And again, my money needs to be invested in the best place, hopefully for the shortest period of time. It may not work that way all the time, but for me, I do see a lot of potential coming back home. Again, the right price needs to be there, though.
Okay. Well, let's aim to get together again in about 9 months' time, mate. And you can, towards the end of the year, let me know how you've got on in the city market.
Mate,
we
will
can
do.
swap some war stories, which I imagine will be.
There's definitely lots of war stories, mate. It's good to see.
No, I appreciate your openness and your transparency around what you're doing, and I do completely agree with you. As people who sort of are property investors, one of the rationales for this show, for example, is to help share that knowledge. So I do appreciate you coming on and not holding anything back. So it's a very good thing to do.
Appreciate it, mate. Thank you for having me again.
No worries. Thank you very much. Remember to check out smartpropertyinvestment.com.au. If you're not subscribing yet to our morning newsletter, so you're the first to know what's going on in property markets right across Australia, smartpropertyinvestment.com.au/subscribe. Or just keep clicking on wherever you listen to this podcast right now, the subscribe button. So every episode we do feeds straight in and you can listen to what's going on. Any questions for Jeremy or myself or anything around this podcast, you can email the team, editor@smartpropertyinvestment.com.au. And if you are operating, you're doing stuff like Jeremy right now and looking to capitalise on the changing markets, look, we'd love to hear your story and bring you on the show. Again, just contact the team, editor@smartpropertyinvestment.com.au, or just send us a direct message via any of the social channels, Smart Property HQ. We'll be back again next time. Until then, bye-bye.